Good morning, everybody.
Good morning. Can you hear me?
I can hear you. Can you hear me?
I can. Good morning. Happy Sunday.
Happy Sunday, everyone.
Everyone is doing all right. New faces in here, some regular ones. Good morning, everyone.
Yeah. How's everybody feeling today?
Guten Tag. Guten Tag. I feel great. Yesterday, I was tired all day. It's been raining in Florida. And I just had no morale, no energy. I basically probably slept the majority of the day. But feeling a lot better today. I was up pretty late on Friday night, actually. It was one of my buddy's birthdays. So I was up pretty late. So that wasn't fun waking up on Saturday early working out, but caught up on my rest, and here we are. Feeling good.
Very nice. Aiden just came back from a lovely dinner with the other folks. I always forget that you're on the total opposite clock from us. What is it there, like 8 p.m., 9 p.m.?
It's about that, yeah.
Sarah getting ready, 11 p.m. Okay, wow. Sarah getting ready to go sledding and build a snowman. Wow, that's a great day.
Snowing.
Sounds fun.
I'm jealous. I love snow. Haven't seen a lot of it, but I love it.
What else we got in here? Maureen, good morning. Ken, good
Good
morning.
news, guys.
Good morning. Ravi, Ricardo, Stephen, good morning. Harshan, you can correct me if I'm saying that wrong, but good morning. Terry, good morning. Good to see you in here.
If you guys are new, we just give it a couple minutes for people to hop on. So if you need to go to the bathroom, get a drink, get a snack.
We'll give it a few minutes. And for those who are new, these Sunday calls, basically how they work is we start similar to what we do on the Monday morning calls. So we'll go through the economic calendar for the upcoming week. We'll talk about dollar and the indices. And then typically from there, we go into your training exercise submissions. We'll review those, provide you our feedback on them, and then we'll give you the new exercise for the coming week. And then after that, we'll just go into a little bit of a Q&A. If you have any questions, you can ask them then, and we'll get them answered.
Yep. These calls are for you guys. They are not for myself and Henry. They are for the majority of the ones that if there's anything going on in your trading, if there's something that you guys want us to talk about with regards to a specific chart, it doesn't just have to be indices. If there's stuff that you look at, we'd love to look at it too. But these calls are for you. So if there's questions, in the chat, that's totally fine. We all are pretty casual too. So if you want to raise your hand, you can press that button and raise your hand and ask the question if it's too long to type out. But we try to utilize this time on Sundays to obviously give you some insight on where we see the markets trading. But if there's anything that you're struggling with during the weeks, bring them here. Don't be shy. Everyone here is at some point of their journey. We're all in different levels, and so don't be shy. Don't hesitate. The only dumb question is the one that you don't ask. So open up. Let us know. We're here for you. We're not going to know what you're trying to fix if we don't know what you're trying to fix. So don't feel as if you're holding back the call or whatever the case is. Sometimes the calls end shorter. Sometimes the calls go over a little bit, and that's totally fine. So other than that, we will go ahead, and I think we'll get into it. Let me get one more sip of water. Good morning, everyone, if you're just now hopping in. Happy Sunday. It is February 18th. Let's rock and roll. So the first thing that we always start out with is the news. Very short week this week with regards to the fact that we have a bank holiday on Monday. It is a United States bank holiday. It is President's Day. So you've got about half a trading day. I expect very low volatility. Aside from the morning chart and chat, I'm not going to be looking at it. I'm not going to be looking to trade at all. There's really no reason for me to try to touch the market, try to capitalize in the market. It's a bank holiday for a reason, right? If the banks are taking a holiday, that should be a key insight to you that it's probably a good idea to utilize it as a day off in the markets. There's no news on Tuesday either. Really only Wednesday and Thursday news this week. So on Wednesday, we do have FOMC in the afternoon being released at 2 p.m. And it is only the meeting minutes this week. And then on Thursday, you have pre-equities news at 8:30, which would be unemployment claims. And then at 9:45, just after that equities open, you've got a flash manufacturing PMI and a flash services PMI. And then 15 minutes after that at 10 o'clock, you got existing home sales. So very light week on news, not a whole lot going on. If I'm looking to capitalize, I'm really probably trying to look at that Thursday slate, but then also understand that you do have some volatility being injected on Wednesday afternoon. So depending on your level of experience, if you are not as experienced as a trader, use FOMC to study. Don't feel as if you need to capitalize on a trade there. I would recommend that you utilize at least the first day, if not first 2 days, to just play out without you. I kind of like weeks like this because as a trader that doesn't trade Mondays, I use Mondays as a prerequisite, and I like to just get some form of narrative and understanding what the weekly template might be, right? If you go in on Monday with trying to trade, you've got no weekly template to potentially follow. You've got no data to support any template you might think will unfold. And so this week, obviously having Monday as a bank holiday and Tuesday having no news, I'll try to utilize both of those days, right? Both of those days. If I can see what Monday did and Tuesday, that gives me 2 days to potentially try to assume or expect what the weekly template could be. So if there's anything that I might like post FOMC, I might take a trade there, but really going to be utilizing Thursday. You know, some weeks we have a lot of opportunities and days to capitalize on. Some weeks are going to be thin, right? And this week's thin. So try to pick and choose your battles accordingly and try not to overstretch anything, right? Know that there's not gonna be a whole lot going on Monday and potentially Tuesday. And then even Friday, there's no news either. So I'm not going to be really batting a shoulder there. Does anyone have any questions, comments, or concerns before we get into everything else? Questions, comments, concerns on news. Pretty self-explanatory there. All right. Let's go ahead and rock and roll. Dollar. So I usually go over dollar. Henry usually goes over the indices. If you guys ever want any of our takes specifically, if you want me to go over NQ on a day or ES, whatever the case is, you can let me know. I'll definitely do it. Henry's feelings aren't going to get hurt. If you want Henry to go over dollar, totally fine. He'll go over it. My feelings aren't going to get hurt. It's just what we've done. We've always done. There's no rhyme or reason to it. Me and Henry usually are pretty spot on with what I think is going to happen is what he thinks is going to happen. So trust that odds are what Henry's talking about is what I've already looked at and probably what I would say too, and vice versa. Anything that I'm looking at is probably what he's been looking at and noting too. So that's just kind of how we run the show there. So dollar on a weekly, we had tapped into this BISI this past week. We had tapped into this past BISI right here, right? You got a high and a low and a candle that has no wicks in between that, which is going to be a BISI, buy side imbalance, sell side inefficiency. We have been utilizing bullish order flow because you can see we have been inverting premium levels, right? We had a CIBI here. What was used as resistance closed above it, now used it as support. We had been watching that. If you've been on the calls over the past couple of weeks, we were monitoring that. And the main idea was we wanted to trade from here up into here. And you can see that we've now accomplished that. Now, note one thing too on the monthly. We have now traded back into this monthly CIBI. So I will zoom out for a second. And you can see we now hit the consequent encroachment of the monthly. And right now we are hanging right at in and around the low end of this. We have 11 days left. So going into monthly closure, what's the one thing that I'm looking for? Do we close above or below the low end, right? So do we close inside the CIBI or do we close below the CIBI, right? That's the one thing that I'm looking for in the monthly is just to see where this closure is, right? And I'm noting that we've already delivered into the consequent encroachment. Going into a weekly, right? We have now fully filled this weekly SIBI, right? So this weekly SIBI has now been fully delivered, right? Last week we did the consequent encroachment and we were expecting price to continue higher, right? We thought that we could potentially see a full fill in this SIBI just because there was nothing really that signaled that we could potentially go lower. So all we did was tap into this BISI. We could not even reach the consequent encroachment, and now we're pulling back lower after fully filling it. So now I'm curious because where did we close? Did we close above, inside of it, or did we close below it, right? We closed inside of it. So not too bullish or not too bearish there quite yet, right? Because we still closed the week in up closure, right? We still have an up closure candle that closed the week. And we also have it closing inside this SIBI, right? So that shows me that we're not all quite bearish there yet, at least. But we do need to note that this SIBI has been fully accounted for. So from there, when I go into a daily, that's going to be kind of the main thing that I'm looking for, right? The daily is going to paint us the most picture. We did not pull into the consequent encroachment of the daily here, and we have a lot left to fill in this manner, right? But we were talking about, and if you in my commentary room, I was curious to see how after closing outside of this daily SIBI within Thursday's candle, I was curious to see if we basically pulled up back into it and closed inside of it, right? I was curious to see if we started to use it as resistance, or excuse me, support, and start making a way higher. Or now that we had closed outside of that daily SIBI, how did we respond going lower, and did we respect the BISI? And you can see we actually had an immediate rebalance, right? Which is a signature of potential bearish order flow, right? It did not leave a gap. So we had an immediate rebalance on Wednesday's low, right? So the previous day's low on Wednesday was utilized as an immediate rebalance. We came and we touched this volume imbalance. We came all the way back lower and we closed on down closure, right? We're still respecting, look at the closure though. For the most part, we're still respecting this BISI. So there still is a chance that price could continue higher, and that's totally fine. But I need to identify how price is trading following delivering outside of this daily SIBI. On a daily time frame, it's respecting the SIBI so far, right? So I'm curious to really see if on Monday and Tuesday, how do we want to utilize this low in here, right? Do we want to go lower and fill the rest of this daily BISI and pull into what we call a discount? So if I take the most energetic price move, which would be from this low all the way up to this high, right? We have our equilibrium point. And if price is going to do what it usually does, which is trade from discount to premium and vice versa, right? Price could potentially want to trade back into a discount, potentially into the daily BISI to fill the full thing, and or as low as the monthly open into what would be viewed as an order block. And then from there, go higher, right? That's totally fine because all we are doing is pushing into what is called a discount, right? So we're still not necessarily in a discount relative to this range. So that's why if we see price continue to go lower, we can't quite get bearish yet, right? So I'm utilizing this point as, yes, a potential area of structure, but also a point of liquidity, right? Sell side liquidity is below this low. So what I'm curious to see is that if we come in and we take this low, right? If price delivers into a discount, that's great. Price could still go higher, but now I want to be utilizing this candle right here. I want to be utilizing the low, the open, and the mean threshold of this candle if we do deliver below it, because that's going to show me the tendency of, is this going to be used as a potential order block in a bearish stance, right? If we come back up into here and we respect this BISI as inversion, right, we could potentially go lower, right? So now I'm going to sit here and I'm going to wait to see how we deliver on Monday and Tuesday. Do we deliver below this low? And if so, how do we respond when we go back to it, right? When we trade back up into it, are we going to use it as resistance, right? So if we go back into a discount, pull back higher, how do we utilize this candle and this BISI, right? And it'll really be the mean threshold of this BISI, and or you can utilize the mean threshold, which is the exact same thing as the consequent encroachment, right? See that nesting of PD arrays? The mean threshold of this potential order block is also the consequent encroachment of this daily BISI. So my eyes go there, and I'm curious to know that if and when we do trade back up into this area, right, do we use it as resistance and go lower, right, and start to see daily candle closure? If we start to see daily candle closure back below here, now I'm going to be sitting here and I'm going to be viewing this as a potential high, and I'm going to be curious to see if price can then continue lower, right? That's where my eyes would go. If we do decide to go back above it, close back above it, I would want it to be used as support, right? And price to continue higher. And that's totally fine, right? Because in a bullish stance, all we would have been doing is trading into a discount and going higher. So once we trade into a discount, my eyes then go, right? It's a whole game of ifs, thens. If we trade into a discount, then how do we respond to premium arrays, right? How do we respond to this inverted BISI? How do we respond to this bullish order block? And then following that, after 1 or 2 days of seeing how closure responds, then I can start to make a thesis on where price could potentially go. So I'm at a point where I do need a little bit more data. I potentially see, because of this immediate rebalance, I see the first half of the week going lower, and then I need to see how we respond going lower. How do we respect certain premium arrays? Then from there, I can start to build a narrative and then utilize what indices are doing to potentially make a case to have a trade opportunity. Any questions, comments, or concerns there? So is an immediate rebalance is more or less than bearish if it created a SIBI instead? Immediate rebalances are going to be more bearish. So and Henry, you can correct me if I'm wrong, but if we see price creating an immediate rebalance and still going lower, right? If we see price trade all the way back up to the previous day's low, and here, right here, and then still showing down closure, to me, that's a more bearish sign. But I could be wrong. That's just the way I view it, right? That's going to show us a lot more of a bearish stance with regards to how order flow is deciding, because it's coming all the way up here and not giving a willingness to close anywhere in and around it, and it's coming all the way back down, not leaving any area for price to want to come back and balance, right? So it's already balancing itself in the moment, which is showing me that price is pretty bearish, right? It's balancing itself in the act, right? Because that means that price might not want to come back to that area, right? If we were to leave a SIBI and displace, right? If this candle was a SIBI and this candle didn't come all the way up there, that gives price a reason to come back up there. But right now, in the meantime, price doesn't have a reason to come back up in balance aside from the volume imbalance, right? There is a volume imbalance here. That would be the only reason price would want to come back up there. So in the short term time frame, right, price should want to not necessarily come all the way back up here, right? Because it's balanced here. So from the short term time frame, I would want to see, instead of price trading back up here, because it already did that and balanced any areas in this down closure, instead of trying to trade back up here on Monday and Tuesday, I would want price to trade down into here, right? Because of the immediate rebalance. It would make more sense because there's nothing to balance aside from the volume imbalance. There's nothing to balance going higher. So price is now already traded back up into here. It's balanced it, and now it's gone here. So there's no business that needs to be taken care of with regards to a SIBI or displacement. The only thing is the volume imbalance. But because of how we've already traded, we've taken buy side in here, right? We took buy side in here, pushed higher into that weekly SIBI and that daily SIBI. We touched the weekly consequent encroachment of the SIBI, right? We didn't touch the daily, but we did touch the weekly, and now we've pushed outside of it. So I'm curious to see if on the first 2 days of the week, do we get a willingness to go into discount? And then from there, we might not necessarily need to touch anything up here. We might want to displace and go lower. So even though there has been no displacement, we've had what's called an immediate rebalance, which to me is showing me that price is technically bearish, right? We closed down closure. So the first 2 days of the week should start to run into this area. Hopefully that makes sense. Kate said the downside move should happen quickly after an immediate rebalance, right? So on the next candle, we should see further bearish movement. Yes. So if I'm thinking of this chart as a 1 minute time frame, right? If I'm picturing it as a 1 minute time frame, right? After prices immediately rebalance this, I'm expecting the very next candle to show, if not the very next candle, the candle after it, to show some form of move down, right? It has no business going higher because it has already rebalanced it. So this is where we can start to get some form of expectation in the market, right? I'm expecting price to go lower on the next day, if not day after, because price has already balanced this immediately. So it's already almost used this as inversion in a sense. So I'd be looking to see if Monday and Tuesday want to trade to this candle's low right here, right? That's my main focus. All right. So Monday and Tuesday, do we trade back into this candle's low, take the sell side, and then from there, I will then go neutral because we have now traded into a discount. I'm curious to see if and when we trade it back higher, do we use that order block potentially, right? If we trade below this candle's low, if we close below this low, do we use this as an order block? If so, how do we respond? Do we use it in a sensitive manner and then continue to go lower? Or do we not respect it as much and do we close back up inside this BISI, right? So that's the furthest I can look with regards to assumption or expectation, right? So expecting Monday or Tuesday to deliver back into a discount and go lower. And then from there, trying to understand Wednesday's closure on how we potentially pull back higher, right? And if you're thinking of power of 3 and the monthly open, right? That's why I have this out here, right? We've gone lower, gone higher. So if you're thinking of power of 3, we've already done manipulation. So we distributed higher. Now I want to see, now that we've established a range, how sensitive are we to the monthly open? Do we get back down to it? Or do we not even necessarily touch it and just trade into this BISI one more time and then go higher? So I'll be looking at candle closure inside this BISI below the equilibrium, how we take the sell side, and then following that, how do we respond in here after trading into a discount? Does all that make sense? Yes, there is a daily volume imbalance as well. Right here. Right? So we'll want to see daily candle closure through that. And then if we want to go higher, why would we want to go higher? Well, there is a volume imbalance here, and we still have all of this to fill. And obviously you have a void in liquidity down here, but I'm not looking too far there, right? I'm still going within the current order flow, which is on a higher time frame bullish. But I can start to expect that to change if once we deliver into a discount, do we start to respect premium raise, right? If we displace higher back through them after trading into a discount, right? If we trade into a discount and then displace back higher, right? That's going to show me that we could potentially go higher, right? But if we don't show any displacement and we come in here and we respect it and go lower, then I can start to utilize all of this as potential areas to show, okay, indices might go higher, right? We're starting to see a little bit of a mixed market, but it's going away, right? Dollar's been going lower, indices for somewhat have been going higher. But there's been no displacement, right? We had the immediate rebalance in here, and then I'll give it to Henry to kind of talk to you guys about how off of this, how have indices been playing, right? That's the main thing too, is we still are in somewhat of a mixed market, but it's starting to slowly get out of that, at least from my thinking. And mixed markets can stay around for a month. There's not a set time in which the market is predetermined to go out of a mixed market. So still kind of hesitant here, but price will show itself sooner or later.
Yeah, just wait up in there and see how you kind of get that development to occur. My view on immediate rebalances is if you already have a draw on liquidity, which needs to be the most important thing in any sense, because you need to know where price is going to, right? If you have nothing to aim at, then you're going to hit nothing. So with immediate rebalances, if you already have a draw on liquidity, you can see an immediate rebalance occur and then see an expedited run toward that draw on liquidity, just like Carson was talking about. But when you're looking for higher time frame, like much more expansive runs, it's good to see inefficiencies form because that gives you a true indication of the order flow. Whereas if you're just seeing an immediate rebalance, you could have a short-term run to some draw on liquidity lower, but if you're not seeing any displacement occur within that and seeing an inefficiency form, then as far as I view it, there's no indication yet of price truly moving in that direction. So with this immediate rebalance, we could see price work down into the sell side, but if you're not continuing to see new SIBIs form as price moves lower, then my initial view on it would be that it's a retracement into discount to continue working higher.
So what I'm going to add to that too. So like, for instance, right, we might have an immediate rebalance to trade back into discount in here. And then when we come back up into this order block, or as far as this daily BISI, right, if we see displacement in here, right, if price creates displacement in here, right, if we start to see displacement
And
in this
when we're saying
area,
displacement, we mean the creation of a new SIBI.
yeah, if a SIBI is created in here, then my stance goes bearish, right? So I'm not necessarily viewing this as a change in character where, okay, now I'm bearish. No, we immediately rebalance this with the idea that we could now just trade back into this draw, which is the sell side, without going higher. So right now, the only thing that I've gained from this immediate rebalance is price should trade into this low before trading back up here. And from there, we could just go higher. But if we come back into this area right here and then displace off of it in the form of a SIBI, then I could start to get some form of bearish narrative. Until then, my only idea is that we're just going to trade back into a discount and take the sell side right here. Because we could still then go higher, right? Because all we're doing is relatively just trading into a discount before going higher and using this as internal liquidity. So I wanted to add.
Sarah, so displacement has to create an imbalance, not just significant movement in a direction, like with big candles or rebalanced price. Yeah, you want to see the imbalance created because the fact that an imbalance is being made is showing that order flow is in that direction, because it's showing an injection in a volatility in a sense in that direction. If price isn't creating an imbalance, then there's no real urgency to continue moving that way. If it keeps coming back to fill in every single inefficiency, then it can continue to move in that direction. But if you're going to see an expansive move in that direction, then you'll want to see inefficiency being created. The best thing you could see for a really expansive move is inefficiency being created and those inefficiencies being treated as breakaway gaps, where price doesn't even return back to them and continues to go further and further.
And we've seen that on indices over the past couple of weeks.
Yeah, look at a monthly chart on the indices and you'll see it. Okay, so we'll jump into indices now. If there's no other questions on dollar.
Correct. Axel said low resistance.
Yeah, exactly. Okay. Let me know if you can see my screen, please.
Yeah, I see it. Also, what up, Bams? I see you in there, brother. How you doing? That's an OG right there.
Oh, yeah. All right, so we'll start with ES just on a monthly chart here. 11 days left in the month, so we're waiting to see how this monthly candle closes. What you want to be aware of starting on your monthly chart is two things, okay? We're trading at all-time highs right now. So I went ahead and switched over to the current monthly contract, not looking at the continuous one anymore. But we have traded above all-time highs, so this is your highest high that ES, the indice, has made historically, which means all the buy side has been run out apart from buy side that exists above the current monthly candle's high. And below price, you have inefficiency being right here. There's no technical fair value gap yet because you have to wait until this candle closes. But I still look for where inefficiency exists because you have to allow for something like an immediate rebalance to occur. And so you still want to be aware that there is inefficiency between this candle's high and this candle's low right here. You also have a fair value gap right here and another inefficiency lower down here. Okay, so you have been creating inefficiency, which is two things. It's an indication of the bullish order flow that we've been seeing. And it's also representing an area where price can return to if a retracement is made. As you're thinking about it like that paint roller, if you're rolling it back to fill in the gaps that you missed on the way up, where are those gaps? Well, it's going to be all the fair value gaps that you see. So this inefficiency being created here, and then this fair value gap, and this one here. All right. So now looking at the monthly chart still, 11 days left in this candle. We want to see, does this candle close above this prior monthly candle's high? If it does, that could give us an indication that we could still continue to work toward higher prices. If this candle closes at or below the prior monthly candle high, it could still continue to work higher, but that gives a stronger indication that we may see a short-term retracement. And if it closes at or below this candle's high, and we have a fair value gap created in here, the likelihood is that you could see a return into that fair value gap there, and then either displace through it and work down toward here, or utilize it to keep trading higher. And that's where we would go into our lower time frames like the weekly and the daily chart and see when price does trade into an old inefficiency, do you get new displacement off of it, or do you just trade through it and continue creating displacement to the downside? Okay, so just be aware of this being created on your monthly chart. So I'll even mark that out there, and I'll make it green. It's easy to see there. Not a fair value gap yet. There's 11 days left in the candle, but we do have inefficiency being created here. And then you'll want to note on the candle closure here, does this candle close above or below this candle's high? So you can mark out your prior month high on your charts as well, like that. Okay, then we'll go to a weekly chart here. All right. So here, draw on liquidity, just like we were talking about with the immediate rebalance and that kind of thing on dollar. What we want to follow in terms of the larger expansion in order flow is where are the inefficiencies being created. And so far, we've only seen inefficiencies being established to the upside. We've seen no displacement to the downside. And so based on a weekly time frame, I cannot at the moment have the expectation for price to trade lower, because it could have a short-term move lower, but thinking about the next weekly candle, it's already traded down to this inefficiency right here and begun to trade higher, and it hasn't created any new SIBI to the downside. So before I start thinking on a weekly basis that candles are going to keep going lower and lower and lower, I would need to see a SIBI formed on the weekly chart like this. Okay, we haven't seen that yet, so my expectation has to remain that we're going to keep using discount arrays and inefficiencies that were created through the move up to trade back into and then trade higher. Okay, and if we're going to trade higher, it's just going to go to inefficiency or liquidity that's above the market. There's no inefficiency above, but there is liquidity being the current weekly candle's high up here. So that's where your buy side liquidity is. All right, so on a weekly basis, you just want to have marked out that we traded into this inefficiency right here, doing this candle's high and that candle's low. Tapped it right there. And there's buy side resting above the weekly candle's high. So if price is to continue higher this week, then this is where it will be reaching for. All right. Any questions here before we drop down to a daily? We all good? Okay, all good. All right, feel free to stop me if you have any questions. Jump down to a daily now. So here's still that inefficiency being created that we were talking about on the monthly. There's the weekly inefficiency that we traded down to earlier this week and then traded back up here. And now you can see that we traded through these daily BISIs that were created here, but went and closed back above them. Okay, so we can use these as reclaimed fair value gaps to continue trading higher. On Friday, we did trade and close just back below this inefficiency right here, but I'm looking at what exists within a discount in terms of what I would ideally like to see respected. So this inefficiency here does not exist within a discount of this larger dealing range. Okay, this one was not even truly in a discount. Down here is your discount if I have my fib on low to high right there. So we drop below it initially and then recover back above it. And if you look on your 4-hour charts, then you can see how this inefficiency, or let's see, 4-hour, it might be NASDAQ that I'm referring to instead of ES, but down a bit more. Okay, so you can see it right there on your 15-minute. When price recovers back above it and you get the closure above, look at that candle slow right there. 5,003 3/4. And the high of the BISI is 5,003 3/4. So utilizing that same inefficiency that we had from before as reclaimed fair value gap to trade higher off of it. So just because an inefficiency is traded through doesn't mean that it loses its importance. Okay, it's still going to be referenced over and over and over again. And so now if we look at this most recent dealing range from this low up to this high, if you find your discount, this now exists within a discount. And so if prices to draw lower, initially it can work into this inefficiency here. And then we'd like to see, is that used to trade price higher up into the buy side? If it's not and price closes back below it, then we can see a deeper move back into a discount below this low here and back into this dealing range. And then you'll want to be watching for, as the next daily candles develop, remember there's 11 days left in that monthly candle, do we end up closing above or below this level here, which is the prior monthly candle's high? Because that will give us an indication next if we're likely to continue working higher or if we're going to reach down into this green shaded area down here. All right. So for now, you just want to watch this dealing range here. And if price trades into a discount, do you see new displacement higher to reach up to the buy side up here? The green shaded area is from the monthly chart. It's not a fair value gap yet because you have to wait for this candle to close, but I'm noting that as inefficiency down there. Because when this candle closes, let's say it closes below the prior monthly high. So let's say it closes like right around in here. You'd have a new fair value gap and failure to close above the prior candle's high, in which case you can have a retracement down into the fair value gap that's being created on your monthly. Because we're always working between the highest time frame areas of inefficiency and liquidity. Okay, last thing to note, I'll get into a 4-hour. All right, we don't see it here on ES, but I will point it out when we get to NASDAQ. Because on NASDAQ, you have a 4-hour SIBI on here, which was utilized on Friday to trade lower. On ES, it traded up into this hourly inefficiency right here, and then started to work lower. So you want to see early in the week, does price continue to create inefficiency to the downside, new displacement to the downside, and continue to work lower as it trades into this? And then when price trades into here, is this used to create new inefficiency back to the upside, trading through premium arrays that were created to the downside? Or does it just trade into those premium arrays and then continue to work lower and create new displacement lower? In which case, you can start reaching down to the sell side here and here. So we're just following that displacement. Does that make sense to everybody here? I'll go ahead and jump into NASDAQ, unless there's any questions here on ES. All good? How are we feeling? Good, Arish? Good, Ken? All good. Kate, all good. Sophie and Claire, okay. All right, we'll go to NASDAQ then. Same things that we're looking at on ES. You can see NASDAQ's monthly candle is currently trading below the prior month's high. There are still 11 days left. So you want to get an indication in those 11 days of, does price close above or below the prior monthly candle's high? Because if it closes below it, that gives us a better indication that price can trade back into this area down here. So the inefficiency that exists between this high and this low, and upon the closure, you'll also have a volume imbalance. within here as well from the prior month. Okay, so just watching that area of inefficiency. And then here you had a fair value up on ES. You don't have it here on NASDAQ. So there you go. That was immediate rebalance there on the monthly candle on NASDAQ. And trading away from it and seeing a new fair value gap form. That would be a continuation of bullish order flow. So you want to see if we do create a fair value gap here. And then see, does this monthly candle close above or below the prior monthly high? Okay. Down into a weekly chart. Same thing we're talking about on ES, just continuing to follow the displacement. So no displacement to the downside yet on a weekly basis. And so until we see a SIBI form to the downside on the weekly chart, then we can't really expect week after week for price to continue working lower because there's no indication of bearish order flow on this time frame yet. Okay, so as for now on a weekly chart, we can just see that price is using BISIs that were created, like right here, between this candle's high and this candle's low, trading into it there to trade higher off of it. But you can also note on a weekly that when price traded into this inefficiency here, so far it has not created a new BISI to the upside. And so that can represent, that can help you identify when you're going to have periods of consolidation or retracement. Because if you look at this previous price action, here, on this weekly candle, when price trades into this inefficiency right here, between this high and this low, it trades into it and trades away, and it does what? It creates a new inefficiency. Okay? You retrace into it, and when it trades away, it creates a new inefficiency. And as you're seeing new inefficiencies created and traded into, and then a new one created once again, that gives you a strong indication that order flow can continue in that direction, and you can continue to see price expand, expand, expand. When it's trading into an inefficiency and trades away but doesn't create any new displacement with it, so it doesn't create a new inefficiency as it trades out of it, then the likelihood is that you'll turn into a period of consolidation or retracement, which is what we're seeing on this previous week's candle. Okay, retracing into the prior candle's low, right there. So while we haven't turned away from a bullish bias because we haven't had anything on the weekly in terms of a SIBI being created to say, all right, the next weekly candles are all going to continue dropping lower, you have to be aware of the fact that there's now an opportunity for continued consolidation or retracement back into this range because we're not creating new inefficiency higher. All right. Jump down to a daily. And let me see, on a weekly, I'm going to take this off. All right. Daily chart, you can see here, this is equilibrium between this candle's low and this candle's high. So your daily dealing range right there. Right here, we traded back into a discount, dropped into the volume imbalance, and then tapped that discount level one more time there on Wednesday and used it to trade back above the daily BISIs right here and here. And then referring back to that as a discount array once again. What do you see right here? After we trade back above this inefficiency, we're not taking it away like it doesn't have importance anymore. It can still be referenced because this candle drops down, and where does it reference? Exactly the consequent encroachment right there of this inefficiency. So we're still using these to allow for them to be used as reclaimed fair value gaps. Okay. Trade higher up into the volume imbalance, and you can see here this candle does not close above it. It wicks above it, does the damage above the prior candle's high, and then drops below. But you can see all the bodies remaining within the volume imbalance there. Okay, so coming back now into a discount of this dealing range here and closing back below this daily BISI here. So NASDAQ is showing a little bit more of a bearish intention, short-term bearish intention than ES is, just for the fact that the current monthly candle is already back below the prior month's high. So if we're going to drop a little bit lower here, you could see NASDAQ return into a discount here of the broader daily dealing range. So that's this level, 17,671.5. And if it's to dig a bit lower, it can continue using this volume imbalance here as a magnet on price because we haven't seen a body, a candle body, close through it yet. And so it can continue acting as a magnet, and price can work down here and trade back higher off of it. It can work down and trade back higher off of it. Or you can see price close through it and then work down into the inefficiency that exists on a monthly chart. Okay. So we just want to see earlier in the week, does price trade back into a discount here? And then do you see new displacement to the upside, trading through premium arrays and creating new displacement to the upside? Or is it trading into those premium arrays and continuing to displace to the downside? If that's the case, then you look for the sell side here and the lower portion of the volume imbalance that hasn't been traded into yet, below this low. And then if it is to close below the volume imbalance, then you have the monthly inefficiency down here being this green shaded area. Okay, I'll jump to 4-hour real quick on NASDAQ. And you can see so far, traded up into the inefficiency here, ran out the buy side, and then created a new 4-hour SIBI to the downside. So that's the first displacement from a somewhat higher time frame perspective that you see to the downside here on NASDAQ. This inefficiency right here is traded into Friday in the PM session and then dropping lower off of it. So on a 4-hour chart, you want to watch and see, just like we were looking at on the weekly basis with trading into an inefficiency and then trading higher. Now that this inefficiency has been traded into, being the 4-hour, and it's trading away from it, does the 4-hour chart create a new SIBI lower? Or do you just see consolidation and retracement, in which case you can start working back toward the buy side? If you see a new SIBI created right here, so just like that, or like that, or like that, then you can continue utilizing that and trading lower down into the sell side and the volume imbalance down here. Does that make sense to everybody? So essentially on a broader, higher time frame scale, we're still interested in the buy side above up here, but we have to allow, as we work into the lower time frames, the opportunity for a retracement back into discount of the range. And we're still using those inefficiencies and following the order flow to get an indication of how deep into a discount could price potentially work. Could it just work into a discount here? Could it refer to the volume imbalance here? Or is it going to work all the way back into the monthly inefficiency down below here? Does that make sense to everybody here on NASDAQ? Arish trading with the highest time frame. Exactly. Sean, can we take the consideration of the market structure shift on 4-hour to make the price go lower, mainly to the monthly inefficiency? You can start with that as a short-term bearish idea, the fact that we're using the SIBI there and trading lower off of it. But you want to see if that displacement continues. Because if you're not seeing new displacement out of this inefficiency, then you can just consolidate within a discount and then displace higher and work back up toward the buy side. But if you're seeing new displacement created here on the 4-hour, then you can continue working down into the sell side, and your next discount arrays would be sell side here, the volume balance low if you keep working lower, and then that monthly inefficiency. Emmanuel, would you utilize daily closure above the down close candle on Tuesday as a change in state of delivery in ES? All right, let me take a look at ES here. Daily closure above the down close candle on Tuesday. Oh, so if you get daily closure above this candle, I just say now, if we're gonna work within the range of this candle, then I just want to look at what discount arrays exist down here, because we're looking at this as the dealing range now, expecting that if price, because we don't want to see closure back below the prior monthly high unless price is going to work down to the inefficiency here. So if it's not going to close back below that, it doesn't really make sense for it to trade all the way down to this low down here. And so we just want to see within this most recent dealing range what exists within a discount that price could use to trade higher off of. So you'd have your mean threshold of this down close candle here, and you also have this daily BISI. So I'd just be watching for price to trade into those areas and then see if you get new displacement back toward the upside. And since this is all on a daily, you'd want to be watching for that new displacement to the upside on your 4-hour and 1-hour charts. And does the height of the CIBI or BISI matter on the same time frame? The height of this.
I think he's talking about how large it is.
How large it is? No, I don't. I mean, you have a clearer, larger displacement if it is a larger BISI, but it doesn't necessarily influence my approach to using it. It's just the fact that one has been created is what is telling the story of order flow. What else did we see? So Darshan, that was crystal clear. Okay, good. All right, cool. Any other questions on NASDAQ? Let me know if I missed any in the chat. I think I got everybody. Okay. Okay, I think we're good. All right, if you have any questions later, we'll do a little Q&A after we do the training exercises too, so you can ask again when we get into that. As for now, we'll go into the exercises. You want to pull them up, Carson?
Yeah, I got it.
Okay.
Alrighty. So before I get into the exercises, I wanted to read something to you guys I saw this week. Because everyone's asking, how do I build an edge? How do I build an edge? How do I build an edge? I need an edge. Carson, I need an edge. How do I build an edge? Well, I'm going to give you the answer. You might not like it. So here are some tips on building an edge, right? As traders, we need edges in the market. You're going to need to backtest your system using either replay mode or FX replay anywhere from 200 to 500 times. You'll also need to stress test your system in real time for the next 200 to 500 trades. And you'll also need to accumulate about 1,000 hours of live chart time, right? At that point in which you'll have 1,000 trades in over 1,000 hours. Sounds like a lot, and it is, but it's needed. But let's break it down into a more simple reality of it, right? If you're averaging 5 trades per week and you're averaging around 3 hours of chart time per day, which is about 15 hours a week, if you take it'll take you about 2 years to hit the 500 stress tested trades and about 15 months to accumulate those 1,000 hours. That will then provide you 2 years of foundational work, which will then set you up for the next 5 to 10 years. And if there's one thing you can't cheat, it's time. So when we're doing these training exercises, I want you to think about how all of that is trying to help you guys gain an edge in the market. It'll allow us to identify and help you understand you using your edge and what works and what doesn't. And if you're going to need, obviously, either the replay mode for 200 to 500 trades, and you'll need to stress test, which is what these training exercises are. They're a form of stress testing for 200 to 500 trades. You'll need to accumulate around 1,000 hours of live chart time. And let's just say if you were to just start trading now, in about 2 years, you'll hit that mark, right? People want to say, well, I want to earn while I learn. Unfortunately, you can't. Yes, you can make money, but the idea of it is not real. It's the slow way is the only way. And so you'll need two years of foundational work, but that will set you up 5 to 10 years down the road. Just throwing that out there for you guys. Everyone's always asking, how do I build an edge? Well, it takes time. You need a lot of trades and a lot of hours. Going into exercise 22. So this week's assignment has to do with percentage gains. If you're currently in profit on your account, try to gain 3% on your account this week. If you're currently in drawdown, try to gain 1.5% on your account this week. The only time restriction is Tuesday at 8:30 a.m. for the CPI release. But you decide the limit on how many trades you take per day, and you also decide the limit and risk in which you trade per trade and per day this week. Obviously, start your account balance, what you started with last week. You calculate the contract and lot size and submit all your trades, right? So the goal is to aim for 3% in profit if you already are in profit, and then you cannot trade 15 minutes before or after CPI. If you are drawdown, try to gain 1.5% on the account 15 minutes before after CPI. We're not going to tell you what we think your max drawdown should be. We want you to decide that this week. If you're negative on the week, we want to see where you're stopped. Target obviously at least 5 handles on ES, 10 pips on Forex, 20 handles on NQ. You guys know the deal. You can move to break even. Partials are welcome, and we always want you to stop loss. Obviously, journal all the good stuff. Alrighty, Mr. Ravi, a very good week as I encountered multiple opportunities, but limited myself to taking A+ setups and avoided anything less. Also stopped after reaching 3%. All trades were 1%. All trades were 1% risk. Trade 1. The reasoning behind it was that we had bearish order flow on the daily and weekly. EU tapped the consequent encroachment of a fair value gap and instantly started breaking down. There was a 5-minute fair value gap that didn't get filled, so I had to wait before I got distracted in real life. Entered later on a retracement, but stop had to be wide. Decided to scratch the trade as New York felt like it was chopping around and I was only there because I missed. Closed as I was approaching the end of my day. It was a 2.5-hour duration, 7 lots. Risk reward was 2, about 30 pips. Time of day was 5:30, out of session later than my usual because of missing entry. PD arrays, it had tapped a weekly fair value gap and a 1-hour order block had formed. The draw on liquidity was Friday's low. Emotions before, neutral when I saw it, but got anxious about missing the setup after it didn't give me an entry. During the trade, he was neutral and was just reading the tape. Emotions after was neutral as I consciously closed after realizing I'd entered late. So you can see the execution in here, right? And then from there, this is the markup, right? This was the idea, right? And you can see he basically protected himself. Even if he were to take partials, it would have came back. So really you can see in this trade right here, not noting himself as a trader, noting the environment and scenario in which he was trading in. He did not feel comfortable. He manually closed the trade, doing the number one most important thing, which is managing risk, right?
Perfect.
Trade 2. Reasoning, bearish order flow daily and weekly. EU continuing to show weakness against GU, retracing slowly into the 1-hour order block and taking out Asia highs. Pyramided along the way, but EU started chopping again and had to close the pyramid around break even. 12.8 lots, 15 lots for pyramid. Risk reward was 2, 14 pips. Time of day, 2:15, the London manipulation. He utilized a 1-hour order block and SMT with GU. The draw on liquidity was Asia's lows. Emotions before, as I'd take this any day. Emotions during was neutral with the actual setup, but got doubtful doing pyramid. Neutral again after closing the pyramid setup. Emotions after, neutral. Got my meat for the day. Right, so in here, he's identifying SMT, identifying that there's news ahead of, or a news coming up. He identifies what his draw is, so he's drawing for the lows, but not needing to trade below it, but he's targeting these Asia lows in here. Right, he's got a 4-hour inefficiency, and then he's targeting, I believe this is an order block on a 1-hour. Price trades up into it. He's using the entire order block as his risk, and then from there, obviously, you can see a tiny pyramid entry in here off of a little tiny fair value gap. But overall, utilizing this 1-hour order block to target the Asia lows, to me, great setup. Risk was wide enough. You can see how price respected the consequent encroachment of it. You took all the way down to the lows, and then from there, you can see how you were able to tape read following that back into the manipulation. But overall, I think this was a good trade. I mean, your risk was wide enough. You're basically playing it on the 1-hour. You had a very short low resistance run into the Asia lows. You didn't necessarily need to take it to the full low, which is, I think, it's good. It's mature to understand that you don't need to take it to exactly the low, and you were able to get your piece. Anything on this trade, Henry?
No, excellent management.
Alrighty, trade 3. EU showing strength against both DXY and GU. Couldn't see EU going any lower. Felt like many were short, and price was just holding without taking any further liquidity. It was a 6-hour trade, had to endure drawdown for 3 hours. Really thought I'd get tagged out before going to my take profit. 14 lots, risk reward was 2, 14 pips. Time of day was during the London session at 3:30. Utilizing a 1-hour order block in majorly instincts, targeting a 4-hour fair value gap. Before his emotions, the setup was solid, but had doubts of myself as it's been a long time since I've taken reversals and usually trade daily order flow. During the trade, very erratic for the first hour when price was chopping and saw some friends closing, saw some getting stopped, but I had started to get bored during the second hour, left the screen for the third hour after setting stop loss and take profit. Emotions after, woke up, the TP was kind of happy to be on the right side of the market. Not touching the account after this trade, even though I found multiple setups after, can see all the executions from the first message. So you can see here, right? That's why stop loss is important. Even though this is hard to sit through, right? Your stop loss is there for a reason. You put the stop loss at the low with the idea that the low wouldn't get tagged. It didn't get tagged and ended up trading to your take profit. Number one thing I can see here is patience. Obviously, you're targeting internal liquidity. So did not give you low resistance at the start of the trade, but started to get a little bit more low resistance following that. I can see you like those 1 hour order blocks, utilizing them cleanly. Obviously, this SMT helped you understand where to place the low, identifying that you're confident that this low could hold. Pretty good here. You can see all of his executions in here. Great stuff. Any comments, questions, or concerns here, Henry?
I really like that you are creating a framework for your trades off the higher time frames. And I had one other thing that I wanted to say. Oh yeah, I think it's wonderful that you are not requiring the external liquidity to be reached in order to take profit. And it looks like week after week, you've been doing these for a few weeks now. And you're trading very well. I like to see that.
Good stuff, Robbie. Alrighty, Shingiz. Duration of the trade was 43 minutes. Size of the trade was 1 contract on a mini. Risk reward was 1 to 3. Time of day, AM session. Utilizing a turtle suit, market structure shift, breaker block, and the draw on liquidity was the 9:57 AM low. Stop placement was below the 10:05 BSC candle. Emotions before, during, and after the trade. Confident that price was going to reach above the 4-hour SIBI minimum. I noticed price was really oscillating for a long period of time during the trade and experienced high resistance. However, I wanted to practice sticking with my trade plan and trusting my initial stop loss. Although it did stop me out, the trade went my direction, and I'm satisfied I got the buys correct, even though I lost out. Admittedly, I was in and out of viewing the charts because the trade I placed was while I was at work. In my experience, I usually close out of the trade if it experiences high resistance, but a combination of being away from the chart and somewhat trusting the trade, I just let it go. So in here, you can see he's utilizing this as a market structure shift, right? He's got identifying this, some higher time frame array, which I think he noted it was a breaker block. So he's utilizing this as a breaker block right here. Inside the consequent encroachment, price trades up higher. You've got some relatively equal lows. He's targeting this high in here, but obviously his target was a little bit below it, which I like to see. Gives you a good solid reaction, but does not break the structure in here. Comes back down below, consolidates, kind of finds its way back up to these highs. This is really hard price action to be a part of, and then ends up stopping you out in here. Couple things on my end. And totally get it too. It's hard when you're just, in and out of the charts to trade, because it's one of those things where when you see price chopping back up here, it's hard to have confidence that price is going to go higher, because as traders, when we're in a trade, if I'm buying, I'd like to see displacement in my favor, especially on those lower time frames. And it's not really giving you any displacement in here. It's showing you that it's having trouble working higher. And even when you see price start to break down in here, might have been a good area to kind of break even, but I totally get it. You're at work. It's hard to go back and forth. I like that you were able to still, though, stick with your bias, right? That's totally fine. Even though sticking with your bias is going to hurt sometimes when it doesn't go your way, it's something that's good practice, right? You're going to need to practice stuff like that. So overall, I think even though it was a loss, right, totally fine. The risk was there, right? You had solid risk. Even if you put your stop at the low, it would have got taken out. And I think, the mental win is identifying that later on in the session, you ended up taking your levels, which is totally fine. And so I think one thing that you can just note is just the time aspect of it, right? This wasn't an AM session move. It was a PM session move. And I'll add something too. So when I'll drop it in the chat today in the Discord of understanding when a PM session could potentially unfold, right? That I think that knowing that will help you understand certain things. So knowing how 9:30 to 10 o'clock trades, right? So if you were to understand how 9:30 to 10 o'clock trades plus how London traded, right? Understanding how those two areas trade, right? What did London do and what did we do during 9:30 to 10 o'clock? Understanding whatever specifically happened, if there's certain signatures in price that are showing you something, to wait towards the PM session I think you could have saved yourself a loss here and notifying that price probably wasn't going to go anywhere in the AM session, right? Because you can see for the most part, yes, we went a little bit lower, but in the entirety of things, we just ranged and then ended up going higher. So that's something that I think that I'll add in the Discord today and I'll give to you guys is, hey, how can I recognize potentially that the setup will unfold in the PM session and we're going to chop in the AM session? Even if there is news, by 10 o'clock, you should be able to have enough information to identify I'm not going to necessarily take a trade until the PM session. I think that that would help a lot. So I'm going to make sure to drop that in the Discord this afternoon, because I think sometimes even myself as a trader, we get so caught up in trying to trade the AM session that we can get caught up in stuff like this, right? I find myself getting caught up, and then from there you end up taking a loss, and then the PM session does what you thought it was going to do. So how can we prevent executing on the AM session, holding, being patient, and waiting for that PM session to execute? And I think that there's some signatures that we could start to study, both in that 9:30 to 10 o'clock open, as well as the London session, that will signal us, hey, we might want to sit on our hands for the AM session and see what the PM session has. I think that'll help a lot. Anything here, Henry?
Yeah, I just wanted to point out one thing in order flow, which is what you're same thing we were talking about on indices. In that move back higher after it made the initial run on sell stops between like just before 10:30 until about 10:50, if you want to note it on your chart with your cursor, Carson. And that entire price run up, note how no new inefficiency was being established to the upside. Okay, that can start to give you an indication when you're seeing grindy price action like that, especially when, if you look within that price action and you see runs below short-term lows, like around 10:50 or so, or just before 10:50, it ran below a 1-minute low. Okay, it happened a couple times within there. Like 10:40-ish is a 1-minute low, and then a little bit before 10:50, it runs that out. And then again, 10:50-ish has a 1-minute low, and a couple minutes after that, it runs that out. And each time you're seeing sell stops run, if you're going to see expansions occur to the upside, the greatest expansions are going to happen after a run on sell stops like that. So when you see a run on sell stops and then price moves higher but doesn't create any new displacement to the upside, that starts to offer you potentially a little bit of sense of weariness about, is this trade actually going to continue working higher, or is it just going up to run some form of stops and then continue to work lower? So if you look within this whole price action, the only real displacement that you're seeing after your trade entry is just SIBIs being created, but not BISIs. So that can start to give you an indication of order flow. I think you did really well to just stay patient with the trade. But over time, as you start to understand these things and follow that through the price action, you may be able to take a trade like this and bring up your risk to half risk when you're starting to see that. Or maybe look for an opportunity to get up to break even after that final run on sell stops, and then it runs up into the little city.
I would also
There's
note
just
too,
little things in the management there.
I would also note too, right? We identified this as a market structure shift, and yes, you're right, but we're on such lower time frames. We have to identify that this parent price swing in here and understand that when we're trading up in it, how are the candle bodies respecting both this SIBI and this SIBI? You can see this SIBI in here, price is respecting that area. So if I'm getting in this trade on this entry right here, I have to realize that really I would need to be a lot more confident with price trading above these highs first, right? Because when we're buying down in here, we're buying with the idea that price, all it did was trade up into here. Even though we broke structure, we still are just filling SIBIs in here. So when you're buying on this down closure, it's the idea that these are still not taken. So there's been no shift up in here. So yes, this is a market structure shift, and I find myself getting caught in this too, identifying that 1 minute chart, that 1 minute market structure shift isn't going to always be enough, right? And I think that that's the main key too, is to understand, yes, we broke structure in here, but really to just fill the rest of these two SIBIs, and candle closure was not showing me that we were able to, because if we were to close back above up here, if we were to close back up above these SIBIs, your entry would have been the inversion. But because price did not close above both of them, right? It closed above this one, yes, but not this one. And we need to be able to permit the idea that both of them could still fill. And so just keep that in mind too, with regards to when you're buying on this entry down in here. I like that you're buying in on down closure. That's good. But identify where the down closure is coming from. It's coming from a full fill of the SIBIs in here with candle bodies respecting it. I would have liked price to close at least back up here above these, and then your buy would have been inside the inversion also. So that's just something to note too. But overall, good trade, and I'll help you with that, with the idea of how could I potentially wait for that PM session. I'll drop some stuff after the call in the Discord. Good stuff though. Good stuff, right? This is good stuff. This is
Yeah, great
learning.
patience
You're not
throughout
going to
it.
learn. You're not going to learn through most of your wins. You're going to learn through your losses, and so this is good. And this is why we do it on a demo account. Alrighty, Miss Kate, the narrative. Based on the way we closed on Monday in the overnight action, I was leaning bearish. Was the most obvious draw on liquidity was the previous week's low, which we got close to after CPI, but did not reach. After the 9 a.m. 1 hour candle closed, a huge 1 hour SIBI above was confirmed. My idea was that we would trade up into it before coming back down to the previous week's low, right? So she noted that I noted pre-market that there was confluence between the previous week's low and the -4 standard deviation anchored from yesterday's high, which adds conviction to the previous week's low being the draw on liquidity. I love this. This is a perfect idea of utilizing standard deviations, right? And I think that that's what I'm going to incorporate next week. This is so good to identify that you're identifying the proper area in which to draw that standard deviation, right? That final Judas swing higher before displacing lower, figuring out where that -4 is could be that final target. It lines exactly with equal lows. Love that. After the 9 a.m. 1 hour candle closed, we had confirmed a 1 hour SIBI. My idea was that price could trade into it before handling down into the draw on liquidity. A potential area for this retracement to end was where I had layered the PD arrays, the 1 hour SIBI, the daily SIBI, and the previous month's high, right? So this is where she's identifying all this stuff in here. Excuse me, sorry. She's got the previous month's high with the SIBI and the 1 hour SIBI, and then the daily BISI. Great idea. Even though I had thought price would go up into the daily BISI area before falling back, it was hard to stick to that conviction after how quickly price rallied up into it. I couldn't find a good reason to take the short until we displaced below the last BISI we had made on the way up. Emotions before. A hot mess. I didn't trust my analysis, but kept thinking that maybe the CPI high above was the real draw on liquidity because price had moved into the daily BISI with such strength. Even as price was falling, I was still trying to frame it as price was retracing lower to go up. I finally pulled the trigger when I saw it displace below the lowest BISI created on the way up. I surrendered to whatever price wanted to do and felt at peace. After, I'm not happy with the way I wasted so much mental capital second guessing myself prior to the trade, but I am happy with the effort in reaching the 3% goal with one trade. Trust myself. Takeaways: to trust myself and don't be afraid to be wrong. It's certain that you will be wrong. That's okay. Learn to take better partials and hold for final take profit. So in here, right, it's okay. She waited for all this to take place, finally saw some displacement and a breaker in here. Doing 2 contracts with the idea that she's utilizing the breaker as her stop. Identifying that there is a 5-minute SIBI in here. Utilizing that SIBI and breaker combo, that unicorn model, with the 15-minute order block right here as well. Real low resistance in here. Takes a 1 contract partial before needing to trade to the low, and then takes another partial before needing it to take the low. That's totally fine. 1 hour and 38-minute trade with 2 contracts. Risk to reward was 3.03 and 6.64. The time of day was the PM session on Tuesday, February 13th. Utilizing a bearish breaker, a 5-minute SIBI, and a 15-minute order block. Drawn liquidity was this previous week's low and that -4 standard deviation that we were talking about. Stop loss was above the mean threshold of the order block on the 15-minute. Partial was at the weekly consequent encroachment wick right in here. So this was the weekly consequent encroachment wick of this previous week's low. Break even after closure below the 5-minute low, right? So as you can see, once we closed here below this, she goes break even. And then once we start to displace lower, she trails that a little bit. I don't have anything bad to say. I mean, you've been killing it, right?
Great trade.
I love it.
Well, then staying patient through that consolidation inside the city as well. One thing
And
you
this
know here,
this entry is fine.
just regarding time here, is when the actual run to the sell side is initiated there, look what time it starts at. It's right around 1:30. So 1:30 is recognized by the price engine. That's the time when it's either going to start repricing to an area of inefficiency or liquidity. And so you can have that consolidation ahead of 1:30, and then as soon as it hits, it's like, okay, time to go.
And I think this
Starts that
entry is
run.
fine. You don't really have to be a participant up here. To me, there's not even really a clear. The only clear entry would be right here on this inversion, but that's still a little bit more high risk. I think you had probably the best entry you could have gotten.
Yeah, very well done, Kate.
Alrighty, Mr. Rajan. Duration of trade was 36 minutes. Size of trade was 4 minis on ES. That's a lot. That's a lot. Risk to reward was 2.43 RR. Time of day was the 1 hour and 35 minute PM Eastern Standard Time, the New York PM kill zone. TP taken during the macro of 1 hour or 150 to 210. Was using a balanced price range on a 5-minute. 5-minute order block to take the entry, 5-minute fair value gap below for support. Drawn liquidity targeted was the buy side liquidity above. Stop placement was below the consequent encroachment of the 5-minute fair value gap. I like that you are utilizing hard stops. I know that we've been working on that with you. So I'm glad that you're taking the hard stops. That's okay. I know it feels weird and it's not fun to do, but it is crucial for your development. And all traders need to have hard stops. Partials taken, did not take any. Given this was my only trade for the week due to travel, I let the trade run to get the 3% gain exercise for the week. I was risking 3.5 handles on the trade. Very tight risk. That's a lot of risk for tight, but that's okay. I'm a break even after the buy side liquidity one hit. I moved stop loss to break even and let the trade run. That's totally fine. I like that you're actually doing that though, because of the fact of you are trying to mitigate some of that risk because you are using 4 minis, right? So that's a lot of risk. So I'd like that you're at least conscious of that and able to move it to break even. Before, I've seen this balanced price rate signature before, which gave me confidence in the trade setup. Emotions during, I was calm during the execution of the trade. I moved stop loss to break even after TP1 hit, first buy side liquidity. However, I didn't take any partials and let the trade run to third buy side liquidity. I started to pick. Emotions after the trade, very happy with my trade execution. So going in here, I love this, right? So you've got the balanced price range, utilizing this as a breakaway gap. That's totally fine. Identifying that your stop is at the consequent encroachment of this, right? So you're assuming that because of this being a balanced price range, price should not return into it. You've got accumulation in here, manipulation down, identifying that you're going to distribute back up into this area to fill the rest of this SIBI. Very, very, what's the word? Very little room for error, but that's okay. You trusted it and you played it and it paid you. So I'm okay with that. This is a very unique model, and this is something that I would say is a lot more of a high risk trade, even though you have the framework, right? Sell side had already been taken. You did have a shifted structure in here, and really you're only playing it, which great exit, by the way, right? Your framework of the trade, I think, is awesome just because of the fact of you had only played it basically to this, right? You're playing the full fill. You play any further than that, your trade gets stopped at break even. So I love that idea. I mean, very, very little room for error, but I can't knock you on it because it played out. I would just say that, this is a trade that just because it's a balanced price range, not all trades, especially on this 5-minute, are going to be viewed as a breakaway gap, but it lined up within the macro. It played within your time. You understood where you needed to take partials. And you, once price traded back above the buy side liquidity, you at least went to break even and you cut risk. So I applaud you there. Hell of a trade. I mean, it's not a trade that we see often in these training exercises, but hey, your model is your model, and this is what you trade, and you feel comfortable doing it. I can only do nothing but applaud you for it. Anything here you want to add, Henry?
No, I think you managed it really well. The thing to note with your stop loss is just that you had the framework and reasoning for placing it where you did. It wasn't just some ambiguous stop placement. And the important thing with when you're placing stops is that your stop comes before your position size. And this is a good thing to remember for everyone. The thought process should never be, I want to take this many contracts and to have the allotted risk. This is where my stop loss needs to go. It needs to go, this is where my stop loss needs to go. And to have this allotted risk, this is how much size I can take. Okay. Yep. That's the correct flow of thinking there. So you had reasoning for where your stop was, and I think you managed the trade really well. You did well to go to break even after buy side was reached there. Well done, Ranjan.
Alrighty. Aiden, Mr. Owl, 7 trades. Was really bullish, but also neutral. Contracts were ES and NQ micros and minis. Average risk to reward was 1 to 2 to 3. Time of day executions were all in the New York Open. Drawn liquidity was usually the 9 a.m. hourly candle high. Models traded was the 30-second model, silver bullet, unicorn model, and the 2022 model. Stop placement, average 12 to 20 handle stop. Time of break evens, average the break even when price traded to a 1-to-1 partial, as I will then move the stop to break even. Summary, I do apologize for not an in-depth journal. I can only provide screenshots of the executions I have taken. I was aiming to test the 30-second model this week. Therefore, most of my executions were taken on micros, while some were also taken on minis. I knew that I will be taking larger amounts of trades as I usually do this week, which led me to take more on micros than minis per usual. Totally fine. I love that awareness. My general bias was bullish, although I was not adverse to taking shorts, as I did take some shorts in my exercises. My executions were mostly based on the New York Open, as I was not available to trade the London Open, and they were centered mostly around the 950 macro. The 950 macro, and I'm assuming the 1050 macro. I had 4 winning trades and 3 losing trades. Overall, about $1,000 USD this week. Not reaching my target, unfortunately. Admittedly, I was pressured to reach my target of 3%, which led to 3 losses on the account. That's okay. That's why it's supposed to be hard. This does not include my accidental Forex trade loss and commissions on my exercise, so don't mind the equity as it's not accurate. I will create a support ticket to, yeah, I saw that. You created a support ticket as you wrote down the trade journals I took for the further in-depth understanding. I'll look over those. Emotions overall, I was not pleased with my performance as a trader this week, which led to peer pressure giving way to trading more than I usually would on the weekly. Emotions during the trade, I was overall neutral during my trades. Emotions during the losses, annoyed as I noticed that my losing trades were only early entries. I get that. That's my problem too sometimes. During the wins, you were neutral, which is fine. I like that, not letting the wins get you a big head. So here are some of the trades, right? Breaker, BISI, identifying that you're at the low. Very easy access entry on this down closure. A little bit of heat and drawdown. That's totally fine. And then from there, you've got the midnight opening price, goes higher. Love that. Very easy, low resistance. I don't think it gets more low resistance than that. Just a little bit of drawdown. Good trade there. Alrighty. And here you can see from there, I'm assuming you're just a little bit back and forth in here. Looks like you did some buying, and then you're just kind of mitigating this as well. I think is for most of these, yeah, so you're buying in here. Stop loss down in here, but I think that you took your. I can't tell whether are you long or short in this one, Aiden. I'm assuming you're long. Yeah, you're long in here, or are you short? Hold on. Okay, yeah, you were long. Okay, so you're long in here. Very small trade, very easy, low resistance. I mean, you're looking at the idea that this is an order block. You've got probably some BISI in here. Price comes into it. Stop withheld. Very short, small trade, 1-to-1. That's totally fine. Alrighty, got a loss in here. That's totally fine. I think that you basically bought in coming in off of this. I'm assuming this is all 30-second model trades in here. Just on the wrong side of the market, a little offside here, aiming for the high. I'm assuming this is you utilizing the 30-second model, utilizing some form of BISI in here with the low in here, price just not really having it, not giving any form of break of structure. And then in here, good trade. You've got a SIBI right there. Price pushes up into the SIBI. You go in here. You've got 2 highs that you're playing to protect you on your risk. Very low resistance in there. Partial in here, partial at the low, and then overall exit in here too. I like that. Looks like for the most part you had a great exit. Same thing in here. So you sold, oh, you bought right here, and then obviously a little wrong side of the market. I think you're probably playing this as inversion with the idea that it could go higher. I think that this is actually where Sengiz was. Sengiz bought in here. So you heard us kind of talk about this area of price action as well, right? So not allowing for price to really close clearly above these SIBIs, and obviously understanding when that AM session is going to really just chop and not necessarily give you a good entry, and waiting for that PM session. So that one got you there. That's okay. This one as well, another 1-to-1. Same thing. So I'm assuming that you are buying on the inversion of this, utilizing this today open price manipulates below it, comes back above it. So you're utilizing price respecting that. You've got BISIs in here, and you can see idea was right? Direction was right, just a little too early, right? Just a little too early. Alrighty, and then from here you have this one was pretty good. So you are utilizing when price is coming all the way up, buying on some up closure. We were talking about that this week. I'm assuming that this was some 30-second model. And then from there, price trades, consolidates, comebacks lower. I'm assuming this was Fridays. This looks like Fridays. And then from there, you're pyramiding. And here, I remember this was like a 15-minute or 30-minute BISI. Price comes in here, trades back lower, gives you a little bit of heat. And then from there, very good exit on Friday. I don't think you could have gotten a better exit. So that's really good, taking those lunch highs. So yeah, I mean, like you said, just a couple of early entries on some of those, testing out that 30-second model. That's what you're going to kind of endure when you're starting to test new things. That's totally fine. But I think for the most part, you had some really good trades in here. I think, you're like anything in life, or anything in trading, right? There was only 3 outcomes I saw in here, right? It was either a small loss, a small win, or a large win. And I think that that's the main factor, right? There were no large losses. So I think that that's another thing that you can kind of take away from it. But I like that you're going in there and you're testing new models. And then you can see the business in here. Still overall up on the account. Not bad. I like it.
That's a great example of really responsible risk management in the testing phases. And of course, all sort of testing should be done within a demo environment like this is.
And here
like even when you decide for yourself to move toward a funded or live environment, if you choose to do so, then when you start trading with a new model inside of that, it's good to do so with minimal risk. So well done.
And we'll go in and read these too, Aiden. But good stuff. Alrighty, this week's assignment. Alrighty, so since we have a bunch of new people coming in this week, we're going to go ahead and keep it really simple. So since we have had a new influx of new members, we thought that it would be beneficial to keep it short and easy. We want you guys to do this stuff. It's going to help your trading. It's not going to harm you in any way. Open up a demo account. If you're new and this is your first exercise, all we want you to do is just utilize whatever model of choice and simply aim for just a 1-to-1, right? Please do not go break even on it. Just win or loss. We want to see your model. We want to see if you win or lose based on your model. Don't go to break even. The only time restriction this week is do not trade on Monday, as it is a bank holiday. Now, if this isn't your first exercise, you can utilize the 1-to-1 for a partial and then hold the majority of the trade to a higher time frame inefficiency or liquidity pool. Once you take your 1-to-1 partial, you can utilize break even. If you're new to it, we don't want you to utilize a break even. We want to see win or loss. That's it, 1-to-1. If you are, relative a regular to doing the training exercises, you can use the 1-to-1 to take a partial and go to break even. But if you're new, don't utilize the break even. We want you to do 2 trades maximum for the week. So risk 0.5% if you're currently in profit or you're just starting out an account. If you win your first trade, stop. If you go break even or lose your first trade, risk 0.25%. Now, if you are currently in drawdown on your account, risk 0.25%. If you win your first trade, stop. If you go break even or lose your first trade, risk 0.25% again. Now, make sure you're being responsible within your trading. All account balances should be rolled over from what you finished exercise 22 in. If you're new, just start a new trading demo account and start whatever size that you would like to start studying. But really, the majority of all of us, we just opened up a $100,000 account. It is up to the trader to calculate the contract and lot risk size. Well, you know the risk actually up here, but your contract and lot size based on the risk. And then basically just at least target either a liquidity pool or inefficiency, either 5 handles on ES, 10 pips on Forex, or 20 handles on NQ. And you always must use a stop loss. And then your journal should include obviously an outline for whatever your specific model is, as well as the time of the trade, the size of the trade, risk to reward that you're aiming for. So in this week, it should be 1-to-1 if you're new. The time of day that you entered, the specific PD arrays that you used, the specific draw and liquidity that you targeted, your stop placement. Obviously, you're not going to be using partials in this one, but when you do use partials, where your partials were taken, the time that you went break even, and then your emotions before, during, and after the trade. Screenshot all that. As you can see, there's plenty of people that are going in there and they don't care whether they win or they lose. They want to do, they're trying to get some form of insight into what they can do better next week. So just because you lost a trade, do not reset the account. Do not do any of that. Be fully transparent. It's all done on a demo. That's totally fine. The idea is to get feedback from us, right? You try to figure out what you can do a little bit better, what you did good, and continue to do all that good stuff. So please be transparent. There's never a week, it's not going to be this game of everybody, who has the best trade, whatever the case is, who has the worst trade. We're not looking at that. We're literally just looking at your trade and how we can potentially give you some feedback to get better in the next week. And every week is a little bit different. We always are trying to utilize different things that basically can try to help you understand your edge better, because like I said before all this, you need an edge as a trader, and that's going to take 1,000 trades in 1,000 hours, right? And you can utilize the stress test portion of trying to understand your edge. Utilize this as a stress test, right? You could go anytime throughout the week, weekends, whatever, and use that FX replay or the replay tool in TradingView and do those back testing trades. But then when you're utilizing the stress testing, right, those 200 to 500 trades, utilize the exercises, right? Utilize those. But any questions, comments, or concerns here? All good?
And if you're new, you can find these posted inside the training exercise channel in the community.
Yep, they're right here. Right, so if I go to training exercises, you can see all of these training exercises.
Can you take trades outside of the exercises? Yeah, you can still take trades if you have other accounts and stuff like that. But for the purpose of the exercise, we want you to follow the risk parameters. So it's just capped at a maximum of 2 trades per week. If you win the first trade, then you're done. If you lose the first trade, then you can take 1 more at half the risk, or if your account's in drawdown, then you take it at the same % risk.
Any trades that you take outside the exercises, you could open up a support ticket, send it to myself and Henry, and we'll look at it, right? That's another part of the membership, right? That's what gives you guys access, is the idea that any trades that you take, right? Not just the trading exercises, but any trades within your trading, even live trades. You guys can send us those submissions in a support ticket, and we'll give you some feedback, right? We're going to give you some feedback. The idea of the training exercise is that, you get to kind of hear us talk over it. If you send it in a submission ticket, then obviously we're going to just type it and we're going to do whatever, and we'll still give you great feedback. But the training exercise allows us to kind of go back and forth. And if you have any questions on top of it, whatever the case is, and if you just want to hear us talk over it, the training exercise, you'll hear us talk over it. And then obviously anything outside the training exercises, we're just going to go back and forth in the support ticket, but totally fine, right? That's what we're here for. So if you're watching this on the recording too, and you feel as if you don't want to do the training exercises, or you want to do more on top of the training exercises, anything outside of that, you can just send in a support ticket of screenshots of whatever it is. And then we'll definitely give you guys some feedback. Any questions, comments, concerns? Hopefully, if this was your first time on this on these calls, this is hopefully it was insightful. This is kind of what we do on Sundays. This is kind of the routine that we've built. We've been doing it for over a year now. So hopefully you gained insight on it. I would say I usually try to leave these calls with a little bit of motivation and something to take away going into your week. And this week I'll keep it short and simple. If you're at the bottom of whatever you think you are, if you've got nothing to give in life, if there's nothing, you're at the very bottom, I would say that is the best place you can be. What do you mean by that? Well, what I mean by that is you have nothing to lose, right? You have nothing to lose. if you are a dead bottom and you're confused and you can't figure this stuff out, and it looks like there is this, if you're at the very bottom of this very high mountain, well, that's exactly where you need to be, because you've got nowhere else to go and nothing to lose. Use that as fuel, continue to go, and just start. It starts with today. It doesn't start tomorrow, it starts today. And you are now inside of a community that allows you to thrive, that allows you to further your development. And we want you to do that. Be active and know that you have nothing to lose, right? I mentioned it in my commentary, right? Life in general is risky, right? You get married, you have kids, it's risky. You become a doctor, it's risky. You go to college, it's risky. It's all risky. Becoming a trader is risky. Joining firsthand is risky. But let me tell you how risky life really is. You won't get out alive. So take the risk, because the bill for not taking the risk is a whole lot more than taking the risk, right? That bill of regret is a lot worse than understanding that, hey, you take the risk, you find out a little bit more about yourself, and the only way you learn is through failure. You're going to fail. You're going to mess up. You're going to get things wrong. That's just part of it, right? And I think that there's two types of people in this world, right? There's the cynics, and then there's optimists, right? And I think that optimists understand that you can be wrong, right? You need to be optimist in the sense of you can be wrong, because just as much as you might be wrong, there's opportunity to be right. And you have to understand that. Don't look at so much into the idea that you are not right. Look at the opportunity of that you can be right. And yes, you might be wrong here and you might be wrong there. But the idea is utilize that to understand that there's later areas where you can be right. I guarantee you you're not going to be right every single week. I guarantee you every single week there's going to be an area in your trading where you're wrong. There were areas where I was wrong this week. There were areas where Henry was wrong this week. We're not here to be right or wrong. We're here to be profitable. And quite frankly, the beautiful thing about trading is that both of those allow you to be profitable. So other than that, I'll leave you with that. Enjoy the rest of your Sunday. Go into this week with the idea that you can fix the things that are going on in your life inside and outside of trading. It can be done. Do you want to get it done, or do you want to be committed to getting it done? Because the want's not going to cut it. You can't just want this. You got to be committed to it. You got to submit to the time prospect. You cannot cheat time. It's going to take time, right? So I appreciate you guys taking some time and hanging out with us on a Sunday morning. Enjoy the rest of your Sunday afternoon. Be safe going into the trading week this week. We're around when you need us. We'll be in front of you guys every single day. 8:45 for that public morning chart and chat, and then inside the actual rooms during the AM sessions. I appreciate you guys. Be proud of yourself. I think that I'm going to continue to stress that, right? The Carson that was in year 1 or year 2 didn't have enough of that. Now it's not needed, and you don't need any of that. But I think the last thing that I'll say is to live is to suffer, and to suffer is to live. And if you don't go through suffering, then you won't go through life, and you will have not lived. You have to suffer. And guess what? Living life, trying to not suffer, is suffering in itself. You must suffer. It's okay. We all are going to suffer, because through suffering we find actual life. So be okay with that. Take a deep breath. You've got plenty of time. But also work with a sense of urgency, because all we have is time, and we only have so much of it. So that one day that you don't get anything done is the one day that is just now past. And there's not a dollar in this world that you can make in trading that you can get it back, right? I can tell you, as long as this 7-year journey has been for me, it went like that. It went just like that. And I know the next 7 will probably go even faster. So have fun. Enjoy it. Don't get so down on the losing trades. Don't get so down on the mistakes. Learn that that lesson will only be repeated until you learn it, and take note of it and have a sense of urgency to fix it, but don't get so down on yourself. There's no reason to. We're not saving lives here. We don't have someone fighting for their life on a hospital bed, and it's up to us to save them, right? We're not saving lives here, right? If there's only one life that we're trying to save, it's yours, and you're gonna not save it by getting so down on yourself over every little thing. Breathe, smile, laugh. Learn to laugh at yourself. That was one thing that I did through my development, is I always found a way to make a joke about what I did wrong at the market. It made it not feel as heavy, right? That's what the community's for. You're here to see that there's going to be plenty of people week in and week out that have failures, both myself and Henry. The only reason why the community is here for that aspect is to make you feel like, hey, you might have had a failure, but so did him, so did he, so did she. And this person had that failure 2 weeks ago and did this and fixed that, right? Don't just reach out to myself or Henry, reach out to other people. They're going through the same thing. Quite frankly, you probably can relate to them more than you can relate to me and Henry, right? It's here to not just be in front of myself and Henry, but build relationships, meet new people, bond with people that you can relate to, that you're almost in near walks of life with, right? Not all of you guys are on year 7. Not all of you guys are on year 3. Some of you guys are on week 1. Some of you guys are on month 3. Some of you guys are on year 1, year 2. So bond together, have a sense of urgency, and meet these people, connect with them, open up, be transparent. As introverted as trading needs to be, those people aren't going, right? They're not going to be with you when you're pressing the button. But outside of that, outside of your trading, connect, collaborate, have fun, get people's phone numbers, find out more about each other, right? That's what it's all about. At the end of the day, we're only doing this to be able to have a sense of life outside of trading, right? I can tell you right now, once you start to find success in all of this, you are not going to want to spend all your time and energy inside a computer screen. You're going to want to go spend time with your family and friends, experience life outside of it, because we spend so much time inside of it now. And yes, you're supposed to. You're supposed to be unbalanced. You're supposed to be obsessed. You're supposed to spend late nights and early mornings on it, to only not have to do that later on. Like I said, that those first 2 years need to be unbalanced, right? 1,000 trades, 1,000 hours. Set up 5 to 10 years, if not a lifetime, of experience and confidence and understanding that will take you way past wherever you think you can go in life. Because quite frankly, I guarantee you, everyone on this call right now, their ceiling is too low. You might have big dreams, but I guarantee you they're not as big as you think that they can go. Because guess what? You have a dream, you have a goal, you hit it, then what? Right? That's when we become unfulfilled. Quite frankly, I guarantee you that a bunch of you guys, your dreams are too small. If I were to tell you half the stuff, if you were to sat there and you were to hear myself and Henry before firsthand trading was even a thing, if I were to tell you the conversation that myself and Henry had when we sat at lunch when we first met each other, quite frankly, it was not, I wasn't talking about me. Henry wasn't talking about him. It was two kids talking about how, going back and forth about how big they can really build something. And it was just dream after dream, goal after goal. And it kept getting bigger and bigger and bigger. And with that, it gets harder and harder and harder. And with that, it becomes longer and longer and longer to achieve. And that's okay, because short-minded people play in days. I play in decades. Right? And everybody that sits there and doubts you, guess what? They play in days. And guess what? They're right. You didn't pass that funded. You aren't a funded trader, right? You're telling everyone this, that, and the other, and everyone is sitting there watching you about, oh, did he pass this funded account? Did he get this payout? Did he get this payout? And you didn't do it this week. Guess what? They were right. Their doubt on you was right. This month. Did he get the funded account? Did he get the payout? No, they're right. But guess what? They're not going to be right forever. They're not going to be right forever. Because they play in days and they measure in days, and you play in decades and you measure in decades. And guess what? There's going to be one day, there's going to be 1 month, there's going to be 1 year where for them having a limited time of being right, they're now wrong forever. So take that with you. That's my motivational rant. Yeah, trust that higher time frame bias. Don't let those 1 minute lower lows, those 1 minute retracements get in your head. We got monthly and yearly expansion ahead of us. So guys, I appreciate your time listening to me rant. For the ones that stuck on, even for the ones that are recording that found your way to the very back end of this. You guys are curious. You guys are doing the right things with the right people. I can assure you that. So stick along with us, trust us, ensure that you're with people that want to see you do good and that are going to put their every minute, heart beating soul into this. Every waking moment, myself and Henry for the past year have been slowly trying to figure out how we can build this and better this for you guys. And if you could hear the conversation that we had at lunch that one day, this is not the end of it. I can assure you this. It's only going to get bigger. It's only going to get better. And it's only going to get more real as time goes on. So guys, I appreciate it. Henry, you have any other words that you want to add?
That's it for me. Good words of wisdom from you. We'll be in the Discord. If you need us, anything, tag us in the chat. We're here for you. And be safe, be responsible this week. Remember, Monday is a half-day market holiday, typically low volume day. There's no reason to be participating in the market on that day. Save yourself for Tuesday, Wednesday, Thursday. When we have
Kate.
right? Oh, Kate. And
sorry, that was a mistake.
Oh, you're good.
no worries. Okay.
All right, I'll leave you with this.
All right.
Everyone, take one big breath in, one big breath out, and say one powerful sentence. Going into this week, I will control the things that I can control and let the things that I can't control be. And it's simple as that. You just got to let it go. You can't control it. You can't change it. I'll talk to y'all soon. Bye, guys.
Take care. Be safe, everyone.